What's up, Microsoft Sphere fam? Get ready for a rapid-fire download of the tech world's biggest movers and shakers. First up, we're diving deep into the turbulence surrounding Adobe, where a major analyst downgrade from Morgan Stanley has sent shockwaves through the market. We'll break down exactly why shares are falling and what it means for the future of digital creative tools. Next, we're cutting through the noise to bring you the essential details from Adobe Inc.'s latest SEC 10Q report. This isn't just another filing, it's a crucial look at the company's performance, revealing key financial and operational metrics that paint a picture of their current trajectory and future potential. Then, we're unpacking the implications of Adobe's quarterly report for the period ending August 29, 2025. Published on September 24th, this official filing offers critical insights directly from the source, giving us the unfiltered data on Adobe's business health and strategic moves. And finally, we're analyzing the immediate aftermath of Adobe's stock slide, triggered by that significant downgrade from a leading bank. We'll explore the specific concerns raised by Morgan Stanley and what this means for Adobe's position as the creative industry's go-to platform. Don't go anywhere, and make sure you're subscribed and have that bell turned on. Adobe's stock takes a dive after Analyst Downgrade. Shares of the creative software titan Adobe have seen a significant dip, plummeting 3.7% in morning trading. This sharp decline follows a critical downgrade from analysts at Morgan Stanley, who have shifted their stance on the stock from overweight to equal weight. Not only that, but Morgan Stanley has also slashed its price target for Adobe shares, bringing it down from $520 to $450. The core reason behind this bearish outlook: concerns over a slowdown in Adobe's digital media annual recurring revenue, a key indicator of the predictable income generated from its subscription services. This slowdown has sparked worries about the company's future growth prospects. What does this mean for the market? Adobe's stock typically shows low volatility, with few major price swings over the past year. This current drop, therefore, signals that the market is taking this news quite seriously, even if it may not fundamentally alter the long-term perception of the business. Investors are now weighing whether this dip presents a buying opportunity or a sign of deeper issues ahead. But is this the full story behind Adobe's market moves? Stick around as we dig into the official numbers from Adobe's latest SEC filing. Adobe Inc. unveils Q3 2025 performance in latest 10Q report. Adobe Inc., a powerhouse in digital media and marketing solutions, has officially released its Form 10Q report for the third quarter of fiscal year 2025. This comprehensive filing reveals a landscape of robust growth across both financial and operational fronts. The company attributes this success largely to the sustained high demand for its subscription-based services, coupled with the successful integration of cutting-edge AI-powered features integrated throughout its extensive product suite. The report details significant achievements in key performance indicators, underscoring Adobe's continued dominance and strategic adaptation in the evolving digital marketplace. Investors and industry observers are poring over these figures for insights into the company's sustained momentum and its investments in future innovation. These are the official numbers, but what's the market's immediate reaction on the ground? We'll break down the latest analyst views that are impacting Adobe's stock price right now. Adobe's latest quarterly report, a deep dive into Q3 2025. On September 24, 2025, Adobe Inc. published its official quarterly report for the period ending August 29, 2025. Utilizing the standard Form 10Q, this critical document, released to the public via Public Technologies, provides an unedited and unaltered look directly from Adobe into the company's performance during the third quarter. It serves as the definitive source for understanding the financial health and operational status of the digital media giant. This filing is essential for stakeholders seeking the most accurate and timely information regarding Adobe's business activities, revenue streams, and strategic initiatives. The data presented here forms the basis for market analysis and investor confidence. But how is the market interpreting these results in real time? we're about to see how recent analyst downgrades are casting a shadow over Adobe's performance. Adobe tumbles as Morgan Stanley downgrades, citing growth concerns. Adobe Inc., long celebrated as the cornerstone for creative professionals, experienced a significant 3.4% stock price drop on Wednesday, highlighting recent market anxieties. The downturn was primarily fueled by a downgrade from Morgan Stanley, which shifted its rating on the software giant to equal weight from overweight and reduced its price target from $520 to $450. Morgan Stanley's analysts pinpointed an optically challenging path for Adobe's core digital media business to reignite growth, despite substantial investments in generative AI tools like Firefly. The core issue, according to the bank, isn't Adobe's innovation, but its ability to translate those innovations into accelerated growth. Digital media annual recurring revenue has shown signs of slowing since early 2024, even with new product releases, wider adoption, and price adjustments. Customers are reportedly opting for lower pricing tiers, which boosts retention but dampens near-term revenue. Furthermore, Morgan Stanley flagged competitive risks from emerging AI startups and tech giants like Meta and Google. While casual users and small businesses constitute about 20% of Creative Cloud revenue, the analysts warned that AI advancements could increasingly impact the professional user base, with tools like Canva and open-source generators potentially eroding subscriptions for single-app users, particularly Photoshop. Increased research and development spending since 2021 to maintain AI market leadership has kept operating margins stable in the mid-40s, but Morgan Stanley anticipates sustained investment will delay future margin expansion. Despite the downgrade, Morgan Stanley still views Adobe as a core franchise, trading at a considerable discount to other major software companies. However, they suggest cleaner near-term stories elsewhere in software, like Salesforce and ServiceNow. This creates a clear tension. Adobe remains vital for creative workflows, but the AI era introduces significant uncertainty, prompting investors to potentially wait longer for growth to rebound amid mounting competitive pressures. So, what's the takeaway from these market shifts and analyst opinions? Stay tuned as we wrap up all the day's top stories in a lightning round recap. And that's a wrap on today's Tech Pulse. We saw Adobe shares face pressure after a downgrade from Morgan Stanley, despite their latest Q3 2025 10Q report showing growth. We've broken down the analyst concerns and the official filings, giving you the full picture. Don't miss out on future market-moving news. Hit that like button, subscribe to Microsoft Sphere for your daily dose of tech insights, and ring that notification bell so you never miss an update. Follow us on all social platforms to join the conversation. We'll see you in the next one.